In 2025, the battle for wealth is happening in two arenas, one made of brick and mortar, the other built on algorithms and market charts. The question isn't just which will make you rich, it's which will survive the next wave of disruption. In 2025, liquidity has become more than just a financial advantage. It's a survival tool. The speed at which capital can move determines how quickly you can seize opportunities or escape disasters. With stocks, your wealth is fluid. You can adjust your position in seconds, reallocate funds instantly, and pivot with the market's momentum. Imagine spotting an AI-driven company poised to disrupt an entire industry. Within minutes, you could own a stake. That level of agility is impossible with real estate. You can't just sell half your kitchen to free up cash for another investment. Liquidity gives you optionality, and in a volatile economy, optionality is power. It allows you to respond in real time rather than being locked into a long-term, immovable commitment. This speed is the reason many high-growth portfolios lean heavily toward stocks. They're weapons for fast movers in a fast world. But speed comes with a cost, instability. The same liquidity that lets you exit a position instantly also allows millions of others to do the same. Market sentiment can shift in hours, fueled by headlines, tweets, or an unexpected earnings report. One day, you're up 15%. The next day, you're staring at a sudden drop. This volatility can trigger emotional decision-making, leading investors to sell at the bottom and buy at the top. Stability, in contrast, is real estate's greatest strength. A property's value might fluctuate, but rarely with the violent swings of equity markets. Even in economic downturns, housing markets often decline at a slower pace, and rental demand can remain surprisingly resilient. Stability acts like a shock absorber. It doesn't eliminate bumps in the road, but it smooths them enough to keep your wealth plan intact over decades. Yet, stability isn't always a virtue. In 2025's hyper-dynamic economy, being too stable can mean being stuck. Real estate can trap your capital in a single asset, in a single location for years. If your property underperforms, due to a shift in local demand, changes in zoning laws, or unexpected repair costs, you can't just click sell and walk away. You're tied to a slow, bureaucratic process that can take months. That's where the real decision lies. Do you want an asset that moves with you, or one that makes you move with it? The liquidity of stocks can feel like a superpower, until the market turns against you. The stability of real estate can feel like a fortress, until you realize you can't leave. In the end, the choice between liquidity and stability isn't just about returns. It's about aligning your wealth with how fast you want, or need, to play the game in 2025. Passive income isn't just a financial term, it's freedom in disguise. In 2025, the ability to earn without constant labor is the holy grail of investing. Real estate has traditionally been the crown jewel of this concept. A well-located rental property can bring in consistent monthly cash flow, often enough to cover your expenses, reinvest, or accelerate debt repayment. It's tangible, predictable, and in many cases, inflation works in your favor. Rents often rise while your fixed rate mortgage stays the same. For people who want a steady stream of income without watching charts or following market trends, real estate can feel like the financial equivalent of a reliable heartbeat. And unlike selling stocks to access money, rental income allows you to keep the asset while still extracting value from it every single month. However, there's a misconception that real estate income is completely hands-off. The truth is, passive income often comes with active headaches, tenant disputes, emergency repairs, property taxes, and unexpected vacancies. You might have a month with zero rent because a tenant leaves, or you face a $10 0 bill for a new roof. Yes, You can outsource property management, but that eats into your margins. In contrast, stocks, particularly dividend-paying ones, can also deliver income, but without a midnight call about a broken water heater. Dividend stocks can give you quarterly cash payouts while also appreciating in value over time, and unlike physical property, these assets can be scaled easily. You can reinvest dividends instantly, automate purchases, and diversify your income sources across multiple industries and countries, all without owning a single building. The real difference in 2025 comes down to growth potential versus income stability. Stock markets, especially with sectors like AI, green energy, and biotech on the rise, have the potential to deliver exponential growth. Real estate, while more stable, rarely offers triple-digit returns in a short period. The trade-off is psychological as much as it is financial. Do you want the comfort of a monthly rent check, even if it grows slowly, or are you chasing the possibility of explosive portfolio gains, knowing that dividends and capital appreciation can vary wildly? In a year where technology is accelerating faster than policy, and interest rates could swing unpredictably, deciding between passive income and market growth isn't just about math, it's about your tolerance for uncertainty and your vision for where you want to be when this decade ends. In 2025, risk doesn't knock politely, it kicks down the door. The global economy has become a tightly connected web where a ripple in one market can trigger a shockwave across the world in hours. Stocks are particularly sensitive to these tremors. A regulatory change in one country, a supply chain disruption in another, or even a viral social media post can spark massive sell-offs. The upside is that these same forces can also send prices soaring just as quickly, rewarding those who anticipate trends before the masses catch on. But that's the challenge, staying ahead of the curve in a system that moves at digital speed. If you're in stocks, you're not just an investor, you're a strategist navigating a live battlefield where the rules can change overnight. Real estate faces different but equally potent risks. Climate change is no longer a distant concern, it's a market force. Rising sea levels, extreme weather events, and shifting climate zones are reshaping where people live and where property holds value. Insurance premiums are climbing, certain regions are becoming financial sinkholes, and urban migration patterns are in flux. Add to that the pressure of changing laws, like rent control measures or property tax hikes, and suddenly your safe investment isn't so safe. While property may not drop 20% in a single day like stocks can, it can still suffer long-term erosion in value if you're on the wrong side of these trends. The danger is that real estate risk creeps in slowly, giving the illusion of stability until it's too late to act. The real test for investors in 2025 is adaptability. Risk isn't something you avoid. It's something you learn to maneuver around, like a pilot adjusting mid-flight to turbulence. The question isn't just whether stocks or real estate have more riskets, which one gives you the tools to pivot when risk appears. Stocks give you speed and flexibility, but at the cost of higher volatility. Real estate gives you durability and physical security, but at the cost of slower reaction times. Choosing between them is really choosing how you want to fight the battles ahead, with the agility of a jet fighter or the resilience of a fortress. Both can win, but only if you know how to play to their strengths before the next storm hits. So which is better in 2025, stocks or real estate? The truth is, there's no universal winner. What matters is alignment. The best investment is the one that fits your timeline, your temperament, and your tolerance for uncertainty. If you crave speed, liquidity, and the ability to pivot in seconds, the market's trading floors and digital platforms might be your battlefield. If you value stability, tangible assets, and predictable income, then bricks and mortar may be your fortress. The most powerful investors aren't choosing one over the other. They're building strategies that harness the strengths of both, hedging their risks while maximizing their upside. In a year defined by change, disruption, and opportunity, the smartest move is not to bet on a single winner, but to position yourself so that no matter which way the world turns, you're already there, waiting. If you found this video helpful, hit the like button, subscribe, and turn on the bell icon so you never miss an update.